Hey, what's up guys, your boy Precision FX, the one and only Eagle. So in today's video, I'm going to be actually showing you how I personally trade the CRT, which is the candle range theory, right? So in this video, we're going to be looking at NAS 100. We're going to be looking at last week trades in which I caught, right? My group and everything like that. But basically, it's just a trade that I caught. And today, I just want to show you how I actually caught that trade. Subscribe, like, share, and push on the notification bell so you're notified every time I drop. And I promise guys, I'm gonna drop every Saturday from now on. But yeah, let's just get into the video. And yes guys, right now you are looking at the NAS 100 right there. I just wanna highlight something for you guys. So with the candle range theory, we're actually focusing on trading within a single day candle, like previous day candle, right? We're expecting movements in which happen by either sweeping the high or the low. Let me just make a quick example right here, up here. So let's say you mark out the high, the previous high of a daily candle and the previous low of a daily candle, right? And the market is actually moving in an uptrend or a downtrend, doesn't matter actually. But as you can see, right now we're expecting that the market either sweeps the high or it sweeps the low, right? If it sweeps the high, we're expecting it to come back and sweep the low again, and that's our trade, right? We don't expect that, okay, it sweeps the high, now it sweeps the low, now we buy again and everything like that, right? We're expecting one move, right? For example, if the market is actually going in an uptrend, right, we're waiting for it to sweep the high, then we target the low or the 50% right there, right? So how do you see the 50%? So these are the settings right here. Pretty simple, pretty basic. So that's your 50% in which you can target, right? That's your 50% in which you can target. So without any further ado, let's get on the chart, guys. Let's get on the chart. I'll lie to you guys, I'm really happy to be back on YouTube. I've been busy, but yeah, now I'm back. Even though I'm writing exams, but I'm back right now. I'm in a good space in which I can make videos for you guys. So yeah, guys, right now we're looking at the daily time frame. So now with this strategy, the time zones don't actually matter. You have to remember that, right? The time zones don't actually matter, since you're actually just looking at the daily chart, the daily time frame, and actually using that, right? So now as you can see, we have our previous day high and our previous day low, right? So now from here we marked out our previous day high. Remember, step one, mark your previous day high, mark your previous day low. Now go to the lower time frames, and that's where you actually see everything, right? So now we just highlight which one is which, right? Previous day high. I'm actually just doing this for you guys. I just draw lines simply because I do understand what I'm looking at, right? Previous day low, and you can see. So now we're expecting what we said, right? A sweep on the high, then we go to the low, or a sweep on the low so that we go to the high, right? And as you can see right there, we have a previous day high and our previous day low. So now we're expecting that the market actually sweeps the previous day high and actually target the previous day low or our 50% in this range, right? Or it does come in a scenario whereby the market is actually sweeping the previous day low and targeting the previous day high, or just targeting the 50%, right? What I suggest for you guys is firstly start by targeting the 50% before you do anything else, like targeting the previous day high or the previous day low in terms of your TP, right? So that you can catch a nice trade in which you can't stress. And I want to let you guys, when you're targeting the 50%, it's more accurate and more nicer or comfortable for your psychology, right? But there's more than just the market sweeping the high and you just entering, right? You have to wait for a certain entry model. Now, here's the entry model. It's pretty simple. Again, example, previous day high, previous day low, right? Now the market is actually moving in an uptrend, swept our high. So now we don't just enter when it comes inside, right? we enter while it retests on our imbalance that's going to be made right there after a market structure shift. It's always there. You just have to look on the lower time frames, right? So right there, you're going to be looking at a market structure shift and your imbalance right there. That's going to be happening right there. Excuse the drawings, but this is a simple example. So yeah, market structure shift is going to happen right there. Then your entry is going to be in the imbalance or the fair value gap right there. Then you target using the Fibonacci tool, which is your 50% right here. We're going to target here, or you're going to take it lower to the previous day low and target that low right there. So now let's actually get on the chart so you can actually see, right? So yeah guys, for you to actually get an entry model, you have to go on the lower time frame. I'd suggest the 15 or the 30 minute, right? So now here, after this sweep, right, you can actually see that the market hasn't actually given us something valid in hand. So you just have to wait for it to go, right? And as you can see right there, the market actually gave us something, right? You can see that it actually made a market structure shift right there. That's our market structure shift, right? And right there, we have our imbalance or fair value gap, right? Let me just highlight for you guys right there. As you can see, now we have our fair value gap right there or imbalance. So now there, that's actually where you do take your trade, right? That's when you say, okay, now we're entering, risking nicely. Now we're entering right there and actually going for the 50% or the previous day low. So now guys, what you have to have in mind is in every entry that you can take in terms of using smart money concepts is that the market can actually do something like this, right? It can go down, break this low right here, go a little bit down again. Now this is just a trick for you to enter more trades. As you enter more trades coming down, it can retest right there and go lower, right? So now this is just a move that kills a lot of people, right? Actually kills a lot of people. You know, like you're coming right here, the market is right here, goes down, and you enter more trades thinking, okay, now it's fully going down. Then it comes back up. Now your positions, since you are on NAS 100 or any other currency, they are taken out, right? So it's simpler to enter one position according to your account size and everything and let it go down, then retest unless there is a displacement to the downside, right? Wait for it to retest right there, then enter, right? So basically your entry is right here. So now we put our tool right there. You see short position, we enter our short position. Our full target is the previous day low, which is what I actually target, and your stop loss above that high. You see that high right there. Now for the spreads, for you not to be taken out, since a lot of people use different brokers, is that you can actually put it up there just to give it a little breathing space, right? It's important to give the market a little breathing space, guys, so that your trades are not just taken out because of spreads, right? So now let's play and see how it goes. Firstly, let's just do this so you guys can see that the trade has actually been triggered on the 50% of the fair value gap. Now, how do you see the 50% of the fair value gap, right? You actually do this. The